So, what's the market going to look like in 2026? Well, all the predictions seem to be pointing to one single word: cautious. But, in a world of modest returns, what does that actually mean for your money? And more importantly, how do you come out on top? Let's get into it.
This is really the big question, isn't it? Especially when the market isn't just handing out those easy wins. When there are no massive gains to chase, it can feel like you're just stuck in neutral. So how do you actually get ahead? Well, the strategy is way more about your mindset than it is about some kind of magic trick.
So, what exactly do we mean by a cautious market? Okay, think less of a wild roller coaster and more of a scenic railway. We're expecting a period of modest, pretty steady growth. It's not about those dramatic peaks and valleys, but just consistent progress. And here's the most crucial point: boring absolutely does not mean unprofitable.
All right, to really understand why all the experts are using words like cautious, we need to look at the signals. And our first stop is one of the most important market indicators out there, the S&P 500.
Now, for anyone who's kind of new to this, the S&P 500 is basically a snapshot of the health of the biggest companies in the United States. Think Apple, Microsoft, Amazon. Their performance altogether tells us a story about where the entire economy is headed. This chart right here really puts it all into perspective. I mean, look, we've seen these incredible high-growth years with jumps of 24%, and we've definitely seen volatile years with some pretty big drops. But the 2026 projection, it's sitting in that much quieter 5 to 7% range. This is that modest return environment we need to get ready for. Okay, so we've got a sense of the performance. But what about the emotion, the feeling of the market? To understand that, we need to look at our second key indicator, the market's fear gauge, which is also known as the VIX. I absolutely love this analogy. The VIX is like the market's heart rate. It doesn't actually measure where the market is going, but how jittery or how calm that ride is expected to be. A low heart rate suggests calm, while a high one, that suggests panic. And this slide shows you what those levels mean in practice. A VIX below 20, that signals investor calm. But when it spikes up above 30, that's when fear is in the driver's seat. The forecast for a cautious 2026 suggests the VIX is probably going to stay in that lower range, which means less overall market panic. So this brings us right to the heart of it all. We've got modest return expectations from the S&P 500, and we've got a low fear environment thanks to the VIX. So in a world without huge swings or obvious bets, how do you actually make money? What's the play? So what's the big secrets? It's not some hot stock tip. It's not a complex algorithm. The data is super clear. In a cautious market, the winning strategy is simply discipline. It honestly becomes your most valuable asset, your superpower. This quote just says it all, doesn't it? When everyone else is getting bored or trying to chase these small, risky trends, the investor who just sticks to their plan, that's the one who's going to have the advantage. It's all about playing the long game when the short game isn't offering much. So what does that discipline actually look like? Well, here are 4 key steps. First up, set clear goals. You have to know why you're investing. Is it for retirement in 20 years, a down payment in 5? That why is going to anchor you when the market feels boring. Second, automate. Just set up regular contributions to take the emotion and the indecision out of it. It makes investing a habit. Third, and this is a big one, avoid the noise. The daily market chatter is designed to make you react. Stick to your plan. And finally, rebalance systematically. Adjust your portfolio on a set schedule, maybe once a year, not in a panic because of some scary headline. This right here is the foundation. Okay, let's pull all of this together into a simple game plan. Here's exactly what you need to remember as you look ahead to what could be a pretty cautious market in 2026. So here's what you need to remember. 1, adjust your expectations. Look for steady progress, not spectacular overnight gains. 2, use the VIX as a thermometer for the market's mood, not as a panic button. 3, you've got to embrace the idea that boring consistency is what actually builds wealth. And maybe most importantly, remember that your own discipline is way more powerful than any market swing. So I'll just leave you with this final thought. We talk a lot about stocks, bonds, all these assets you can buy. But in a quiet, cautious market, maybe the most valuable asset you can possibly hold is something you can't buy at all: patience.